New $6,000 tax deduction for seniors. How to claim it. Just signed. July 4th. Stop whatever you're doing because if you're 65 or older, you just got handed up to $6,000 in tax savings that could completely eliminate your federal tax bill. And 90% of seniors have no idea this even exists yet. On July 4th, 2025, while everyone was watching fireworks, the White House quietly signed something that affects 57 million Americans. They're calling it the One Big Beautiful Bill, and buried inside is a tax break so massive that 88% of Social Security recipients will pay zero federal taxes. I'm about to show you exactly who qualifies, how much you'll save, and the 3 steps to claim this money before it's too late. But first, let me tell you why nobody's talking about this yet. The mainstream media is focused on other parts of this bill. They're not explaining what this means for regular retirees. Financial advisors? They're still figuring out the details themselves. The IRS? They haven't even updated their forms yet. Which means right now, you have a massive advantage if you understand this first. Here's what happened. For decades, seniors have been getting crushed by taxes on their Social Security benefits. You worked your whole life, paid into the system, and then the government taxes you again when you try to use your own money. It's been highway robbery, plain and simple. But this new law changes everything. If you're single and make less than $175,000 per year, you now get a $6,000 standard deduction on top of your regular deduction. If you're married and make less than $350,000, you both get $6,000 each. That's $12,000 in extra deductions. Let me show you what this actually means for your wallet. Meet Janet. She's 67, single, and her income last year was $65,000. That's $40,000 from Social Security and $25,000 from her retirement accounts. Under the old rules, she'd owe about $4,800 in federal taxes. Under the new rules, she'll owe zero. Nothing, nada. That's $4,800 staying in her pocket instead of going to Washington. Or take Robert and Linda. They're both 70, married with a combined income of $95,000. Old taxes, $7,200 new taxes. They just got a $7,200 raise without doing anything. Now, you might be thinking, this sounds too good to be true. What's the catch? There are actually 3 catches, and if you don't know about them, you could miss out entirely. Catch number 1. The income limits are strict. If you're single and make $175,000, you get nothing, not a penny of this deduction. If you're married and make $350,000, same thing. You're out. But here's what they're not telling you. There are legal ways to lower your income to qualify. I'll show you exactly how in just a minute. Catch number 2. This only applies to federal taxes. Your state taxes, those don't change. If you live in California, New York, or any state that taxes Social Security, you're still on the hook for those. But even with state taxes, this federal break is massive. Catch number 3. You have to know how to claim it. This isn't automatic. The IRS isn't going to call you up and say, hey, we owe you money. You need to take specific steps, and if you don't, you'll miss out on thousands. So let me break down exactly who qualifies for this life-changing deduction. First, you must be 65 or older by December 31st of the tax year. Turning 65 in 2026, you'll qualify for 2026 taxes. Already 65 or older? You qualify right now for 2025. Second, your income must be below the limits. For singles, $175,000. For married filing jointly, $350,000. And here's the key. This is your total income. Everything counts. Social Security, pensions, 401k withdrawals, investment income, part-time work, all of it. But remember what I said about legal ways to lower your income? Here are 3 strategies that could save you thousands. Strategy 1. Delay your IRA withdrawals. If you're 73 and taking required minimum distributions that push you over the limit, talk to your tax professional about qualified charitable distributions. You can donate up to $100,000 directly from your IRA to charity, and it doesn't count as income. Strategy 2. Harvest your losses. Got stocks or mutual funds that are down? Sell them before December 31st. You can use those losses to offset other income and potentially get under the limit. Strategy 3. Bunch your deductions. If you're close to the limit, consider bunching 2 years of charitable donations into 1 year. This could lower your income enough to qualify. Now, let's talk about exactly how much this saves you in real dollars. If you're in the 12% tax bracket, This $6,000 deduction saves you $720. In the 22% bracket, that's $1,120 in your pocket. In the 24% bracket, you save $1,440. But here's where it gets even better. For many seniors, this deduction doesn't just reduce your taxes. It can push your income so low that your Social Security becomes tax-free. Let me show you the math. John is single with $30,000 in Social Security and $20,000 from his pension. Total income, $50,000 with the standard deduction of $14,600 plus the new $6,000 senior deduction. That's $20,600 in total deductions. His taxable income drops to $29,400. But wait, because his income is now so low, less of his Social Security is taxable. Instead of 85% being taxable, now only 50% is taxable. This creates a multiplier effect that can save you thousands more. So how do you actually claim this deduction? Here are the 3 steps. Step 1. Calculate your 2025 income. Add up everything. Social Security, pensions, retirement account withdrawals, investment income, everything. If you're under the limit, move to Step 2. If you're over, use one of the strategies I mentioned to get under. Step 2. Keep detailed records. The IRS might want proof that you qualify. Keep statements showing your age and income. This includes your Social Security statement, 1099s, and any other income documents. Step 3. File correctly in 2026. When you file your 2025 taxes next year, make sure you or your tax preparer knows about this deduction. The IRS hasn't announced the new form yet, but it will likely be a simple checkbox or additional line. Don't assume your tax software will automatically include it. Double check. Now, I know some of you are thinking, what if they change this law? What if it gets reversed? Here's the thing. This has bipartisan support because it helps seniors in every state. Red states, blue states, purple states. Everyone has seniors who benefit. Plus, taking away a tax break from seniors is political suicide. Once this is in place, it's almost impossible to remove. But that doesn't mean you should wait. The sooner you understand this, the sooner you can plan. Let me give you some real examples of how this changes everything. Susan is 68 and was planning to convert $50,000 of her traditional IRA to a Roth this year. But that conversion would push her income to $180,000, just over the limit. By waiting until next year and converting only $40,000, she stays under the limit and saves $1,440 in taxes. That's a $440 she can invest instead of sending to the IRS. Or take Michael and Patricia. They're both 72 and were stressed about required minimum distributions. Their RMDs plus Social Security put them at $360,000 income, $10,000 over the married limit. They set up a $15,000 qualified charitable distribution to their church. This lowered their income to $345,000, qualifying them for $12,000 in deductions and saving them $2,080 in taxes. Here's something else nobody's talking about. This deduction could affect your Medicare premiums. If this deduction lowers your taxable income enough, you might qualify for lower Medicare Part B and Part D premiums. Those savings could add another $2,000 to $4,000 per year in your pocket. We're talking about total savings of $5,000, $8,000, even $10,000 per year for some couples. Over 10 years of retirement, that's $50,000 to $100,000 staying with you instead of going to taxes. Now, let's address the elephant in the room. Why is the government doing this? Simple. They finally realized that taxing Social Security benefits is double taxation. You pay taxes on the money when you earned it. Your employer paid taxes on it. And then they tax you again when you get it back? It never made sense. And this is the first step toward fixing it. But here's what you need to watch out for. Scammers are already trying to take advantage. You might get calls or emails saying they can help you claim this deduction for a fee. Don't fall for it. This is a simple deduction you can claim yourself. No special forms, no applications, no fees. If someone contacts you about this, hang up. It's a scam. The only people you should talk to are your regular tax preparer or a qualified CPA. And speaking of tax preparers, make sure yours knows about this. I'm already hearing stories of preparers who haven't heard about it yet. Print out the information from the IRS website and bring it with you. Don't let ignorance cost you thousands. Let me share one more powerful example. David is 66, divorced, and thought he'd be working until 70 because he couldn't afford to retire. His Social Security would be $2,500 per month, but after taxes, he'd only net about $2,100. With this new deduction, his Social Security becomes tax-free. That extra $400 per month, $4,800 per year, means he can retire this year. This isn't just about money. It's about freedom. Freedom to retire when you want. Freedom to help your grandkids with college. Freedom to take that trip you've been postponing. Freedom to stop worrying about every penny. So here's what I need you to do right now. First, calculate your 2025 expected income. Write it down, know your number. Second, if you're over the limit, make a plan to get under it. Talk to your financial advisor about the strategies I mentioned. Third, share this video with every senior you know. Your brother who just retired. Your neighbor who's struggling with taxes. Your friends at church who are on fixed incomes. They deserve to know about this. Fourth, subscribe to this channel and hit the notification bell. Tax laws change constantly, and I'll keep you updated on anything that affects this deduction. You don't want to miss out because you didn't know about a change. Remember, knowledge is power, but only if you act on it. This $6,000 deduction could be the difference between struggling in retirement and living comfortably. Between choosing generic medications and affording the brands that work better. Between skipping family gatherings to save money and being there for every moment. Don't let this opportunity pass you by. You've worked hard your entire life. You've paid into the system for decades. This is your money, and you deserve to keep it. Take action today and make 2025 the year you finally get the tax break you deserve. Your future self will thank you, your family will thank you, and your bank account will definitely thank you. This is your chance to turn the tables on the IRS legally and ethically. Don't waste it.